Welcome to the Duck Dive. Today we're taking a different angle on the markets, really shifting the focus. For so long, everyone's been watching price, momentum, the latest breaking news.
Chasing the headlines, basically.
Like,
Reacting to symptoms.
Exactly. Symptoms. But what if that whole approach is, well, missing the bigger picture? Our mission today is to get into a framework called structural intelligence. It's the work of Devin McClarty, and this argues that the real value, the long-term survival, comes from structural soundness, not just speculative buzz. We're pulling this directly from proprietary documents. These are authored by McClarty, owned by D Investment Enterprise LLC, and published by D Publishing Group. Our job is to break down these, frankly, quite dense sources for you. Show you how this team is looking past the surface noise.
It's a huge shift in perspective. The documents make that really clear. It's about moving from watching market reactions to diagnosing the system's health. Think about it. Traditional analysis looks at speed, right? How fast is the asset moving? Structural intelligence looks at the foundation. Is it solid? So instead of tracking things like momentum, price, sentiment, which always changing, this framework measures, well, the deeper stuff. Discipline, faith, and design. These are embedded in the system itself. It's about checking the quality of the engine, not just the speed dial.
Okay, let's unpack this. If we're ditching those usual metrics, what's the core foundational idea here? What justifies this whole new way of looking at things?
The absolute core argument, and this comes through so strongly in the sources, is that the structure itself is the most important asset. Forget the price tag for a second. It's the integrity of the system holding the asset that matters. McClarty's documents, they use this great analogy. Structural integrity acts like monetary gravity. You can't see it directly, but it's this stabilizing force. If a system, whether it's a currency or a blockchain network, doesn't have that integrity, it's fundamentally weak, vulnerable. It doesn't matter how hyped it is right now. Monetary gravity is what anchors value, what ensures it actually lasts.
Wow. Okay, that reframes everything. If integrity is monetary gravity, then the goal isn't predicting next week's price spike.
Not at all.
The point of structural intelligence, using these new metrics, discipline, faith, design, it's about spotting which systems are actually built to last.
Precisely.
So you're moving from just listening to the market chatter, the daily price swings, to analyzing what the design itself tells you about its real long-term stability.
You got it. What does the blueprint reveal?
And to make this practical, to move beyond just concepts like discipline, the framework uses two specific tools: proprietary indices.
These are the tools that make it actionable.
We've got the Confidence Correlation Index, CCI, that measures the human side, right? Emotion, belief. And then the Blockchain Divergence Index, BDI, which gets into the code, the architectural integrity.
Let's start with the human element, the CCI. Think of this as the macro trust signal. It's trying to gauge how people collectively feel about the stability of the whole global financial setup, the traditional one. And it does this by tracking three core traditional assets. Each represents a kind of emotional pillar in finance. First, gold. Obvious one. That's your measure of global fear. When trust collapses, people run to gold, tangible safety. Second, the dollar. This tracks global dependence. The reliance on the existing reserve currency system, whether you like it or not. And third, and this is interesting, to a specific index called the Dinar Divergence Index, or DDI. It tracks the dinar as a measure of global faith.
Okay, hold on. Gold and the dollar, yes, standard global indicators, but the dinar, that's definitely not something you see in typical risk indices. What exactly is it measuring within that DDI tool that McClarty and D Investment Enterprise are using? How does that give a reading on global faith? Why the dinar, specifically?
That's probably the sharpest departure from conventional thinking. And the documentation is very, very specific here. Think of it like this. Gold shows panic out of systems. The dollar shows forced dependence on the main Western system. The dinar, in the specific analytical context, is used as a proxy. It represents a belief in stable, long-term, non-Western systemic alternatives. It's trying to capture a measure of resilience against that dependence loop you see with the dollar. It indicates capital flow that's actively looking for different anchors, ones perceived as structurally sound, outside of just rely on the main fiat system. So if that faith metric starts to wobble, it suggests a much deeper fracture in global belief than just looking at gold or the dollar alone would show you.
Right. So by looking at how fear, gold, dependence, dollar, and this alternative faith metric, dinar via DDI, play off each other, The CCI gives you this holistic, real-time snapshot of the traditional world's emotional state, its conviction level.
Exactly. It's measuring conviction, not just where the money is flowing moment to moment.
But, human emotion, even measured carefully like this, can be irrational. Panic, euphoria.
Always.
Which brings us to the other side, the BDI. The cold, hard logic, you said. The code side, the Blockchain Divergence Index, BDI. This is the microtrust signal for the digital realm, cutting through the hype.
That's the idea. The digital space is just full of noise, right?
Right.
Hype cycles, thousands of tokens flying around. The power of the BDI is meant to be its objectivity. It tries to ignore the price charts and the Twitter sentiment for a moment. It objectively measures if a digital economy, let's say Ethereum or Cardano as examples, is actually designed with integrity. And it does that by looking at whether the structural development, the real code commits, the governance actions, the architectural work is keeping up with its market value or speculation.
Can you break that down a bit more? Design with integrity, what does that mean practically? Especially if a big blockchain's price is going through the roof.
It means comparing the price signal to the discipline signal. So say a major crypto's price and volume are hitting record highs, huge excitement. But if the BDI reading is weak, meaning core development, updates, actual improvements to the structure are flatlining, then that system is structurally fragile. It's running on fumes. Pure speculation, disconnected from its monetary gravity, its foundation. The BDI is designed to give you that crucial metric for the digital age, separating real architecture from just hype. Things built to last versus things built to flip.
Okay, here's where it gets really interesting, because structural intelligence isn't just about these two indices in isolation, right? It's when you merge them. You combine the CCI, how humans are feeling about stability, with the BDI, how the code is actually built to enforce it. That gives you the full picture, framing the whole market dynamic as, what was it, structure versus speculation.
Exactly.
Yeah.
And when you merge them, the sources suggest the market tends to fall into one of two main states, two loops. The first one, the healthy one, is called the confidence loop. This state is marked by what the documents call cross-market discipline. It's where traditional fiat belief and solid digital design actually feed into each other positively. Trust is high overall because both the old and new systems are showing structural strength.
What would we actually see? What are the signals that we're in that healthy confidence loop?
You look for stability signals across the board. The CCI needs to be stable. That means global fear, gold, is balanced out by faith, a neutral DDI reading, and dependence, the dollar, isn't showing signs of stress, it's steady. And crucially, you need to see that stability combined with a strong BDI in the key digital systems, like an Ethereum or a Cardano.
Meaning their development is keeping pace with their value.
Right, robust structure supporting the price. When you see that combination, the interpretation is that both traditional and digital markets are being valued for the right reasons. Strong, disciplined design. That's sustainable value creation.
Okay, now contrast that with the flip side, the danger zone, the dependence loop. This is the warning light, where structure gets ignored and price becomes the faith.
Precisely. It signals that structural cracks are spreading, as the sources put it. Investors are flying blind, ignoring the foundations.
What does that look like in terms of signals?
The dependence loop is like a system under stress. The signals are the opposite of discipline. You see the CCI weakening significantly. Gold spikes, fear is rising. But you also see the dollar drifting, positive dependence is also rising.
So people are scared, but they feel stuck.
Exactly. They're running for safety, but they're trapped in a system they might fundamentally distrust, but still rely on. High fear, high dependence simultaneously. That's a bad mix.
And how does the digital side, the BDI, play into this warning?
This is the critical link. While you see that fear and dependence rising in traditional markets, you often see the BDI in major blockchains starting to show a positive drift.
Positive drift, meaning price is going up faster than the underlying structure supports it.
Yes, price is accelerating, volume might be high, but the actual structural work, the code discipline, the core improvements is lagging or flat. Money is just chasing momentum. It's flowing based purely on emotion, on belief in the price itself, while totally ignoring the weak foundations. That's the ultimate red flag. Capital has detached from structure. It's pure speculation taking over.
Let me try and make that concrete for listeners. So in this dependence loop, you could see gold spiking because everyone's worried about, say, global instability. And at the same time, you see some major cryptocurrency spiking, not because its tech got better, but because people see chaos and just pile into anything volatile, hoping for quick gains.
That's a perfect example. Regardless of whether that crypto's network can actually handle the load or has a sound long-term plan.
And the de-investment enterprise documents argue that seeing both those things happen together, the fear dependence in traditional assets and the undisciplined hype in digital ones, that's the clearest sign the whole market is ignoring fundamentals.
It's the system flashing warning lights, yes,
Yeah.
ignoring its own structural integrity.
So after going through all this, what does it all mean? What's the core takeaway for someone trying to learn from this structural intelligence framework?
I think the core lesson is that this offers a potentially timeless way to assess value. It forces you to shift your focus completely. Stop getting lost in the daily noise, the price swings, the sentiment shifts. Start looking at a system's ability to withstand stress, its endurance capacity. By trying to measure discipline, faith, and design, you're essentially decoding the real flow of belief around the world. You're finding where that monetary gravity is strongest. It's fundamentally about measuring resilience, not just reaction.
Right. And if you wanted to boil down everything Devin McClurdy and his enterprise are trying to capture here, this whole framework looking at fear, faith, dependence, design, it really comes down to one core principle, a kind of mantra for the whole thing.
There's one line in the sources that sums it up beautifully.
Let's hear it. Gold measures fear. The dinar measures faith. The dollar measures dependence. Blockchain measures design, and design reveals discipline.
That says it all, doesn't it?
Yeah.
And it pushes you to think structurally, well beyond just finance. If structural integrity is the real asset, if it acts like monetary gravity, then you should be asking this about everything. How do you measure the actual design, the resilience of the tech platforms you use, the supply chains you depend on, the companies you invest in or work for? How do you look beyond their surface price or popularity and assess their true underlying structural intelligence? That's the real challenge, I think.
A challenge definitely worth thinking about. Thank you for joining us on this deep dive into the architecture of modern markets.